One high-yielding stock that's been battered over the past couple years is Arbor Realty Trust, ticker ABR. During this time, the company has been going through a high interest rate environment, several attacks by short seller groups, and a slowing housing market. Last week I mentioned that despite these concerns, I still see opportunities in this stock, and I recently bought a small number of additional shares of ABR. In that video, I gave a brief overview of the recent developments surrounding this company, but I didn't go too in-depth. So in this video, I want to dig deeper into the current state of Arbor Realty Trust, as well as the new round of allegations that came out about 2 weeks ago. As I discussed last week, Arbor Realty is a company that specializes in loan origination and loan servicing, primarily in the multifamily sector. They issue floating rate bridge loans to real estate owners, developers, and investors. There are several purposes for these loans, but the most common things they're used for are property acquisitions, renovations, and new construction. Companies will use these bridge loans to make a large transaction while they're still working out the conditions for longer-term financing. So for example, an investor might want to move ahead with the purchase of a multifamily property, but they haven't worked out the financing agreement, which can take months to finalize. So with that being said, the state of the housing market is a really crucial part of this company's success. However, it's also important to keep in mind that when we're talking about the housing market, there's a difference between what's going on in the housing market and what's going on in the multifamily market. Most people are well aware that with interest rates being so high, it has resulted in a slowdown in home sales. Construction has also been down alongside with major home renovations because of the increased costs associated with these things. But when looking specifically at the multifamily sector, where Arbor Realty benefits the most, this has actually been booming. The number of new apartments being built was at an all-time high last year, which seems counterintuitive because of interest rates being so high. Why would so many builders be willing to pay so much more to construct these new properties in this environment? Simply because of the overwhelming demand for them. Today, apartment vacancies are at historic lows at 5.4%, and home prices as of 3 months ago were still increasing. So with limited options, many people are now renting or are remaining renters and aren't buying homes right now. So these companies that are still building apartments have done their due diligence and have concluded that it's still worth paying more for everything to build these new complexes, benefiting companies like Arbor Realty. But while this has all been going on, this company has still been under constant attack by short sellers. They've been so bad that this company has even issued press releases defending themselves, which is something that companies don't like to do. Simply acknowledging these short reports can give them the appearance of validity, but in Arbor's case, they've been pretty relentless. On the 8th, Arbor Realty Trust made the following statement, quote, Arbor Realty Trust on Friday, May 3, 2024, released its first quarter earnings press release and filed its first quarter Form 10-Q. As you may be aware, Arbor has been and continues to be the subject of certain reports by short sellers who frequently make statements that reflect their own opinions based on certain select data. In light of the current environment and the continued elevated short interest in our company, we anticipate more of these short seller reports in the near future, which may also be featured in the press. In an effort to minimize any confusion in the marketplace or with our investors, and instead of responding to each article that cites these reports, we want to reiterate that we stand by Arbor's detailed filings, audited financial statements, and the comments made on our earnings call. Rather than relying on short seller reports or press articles, we encourage everyone to carefully review our comprehensive public statements and disclosures. Our materials detail Arbor's continued success in managing through a very challenging environment and demonstrates our ability to consistently outperform our peers. Please refer to the investor materials page of the investor relations section of our corporate website for charts on our performance. The two main culprits behind these attacks are Ninja Research and Viceroy Research. Both organizations have very similar websites, so I've speculated in the past that they might have some kind of connection to each other. But without a doubt, Viceroy Research has been the most aggressive in terms of attacks against Arbor Realty. You can see on their website the number of reports that they've written. As I've mentioned in previous videos, Viceroy's had a pretty sketchy past when it comes to releasing their reports. They've been in legal trouble several times for publishing information on companies that were proven to be blatantly false. They're currently being sued right now by Medical Properties Trust, who claim they've been organizing a smear campaign against them, and they won a preliminary ruling. These short sellers have made a wide range of accusations, ranging from Arbor having committed fraud to, strangely, having a portfolio of poorly performing mobile home properties. If you just tried reading these reports, you would notice right away that not only are they often full of grammatical errors, but they use a lot of dramatic language. Short reports are designed to scare you. They're trying to trigger and appeal to your emotions. You would swear that if it wasn't for the grammatical errors and the spelling issues, that these reports were written by people who are better writers than researchers or financial analysts. Now, not all short reports are scams. There have historically been some pretty good ones. One that I would consider to be a grand slam was the one that attacked Icon Enterprises about 2 years ago. But the Ninja report against ABR was probably the worst one that I had ever read. It was full of sources that did not exist, poor grammar, and another key item missing was the author did not identify themselves. These reports are very time-consuming to make, and you would think that someone would want to add their name to them if they stood behind their research. But since we don't know who wrote it, we don't know their credentials, certifications, if they went to school, or anything like that. But when looking at Viceroy, these reports I would consider to be slightly better than what Ninja put out, but they're still bad. After making all of their accusations, Viceroy found a narrative that appeared to stick, which is that Arbor is holding these bad CLO investments. Let's go ahead and take a look at their most recent short report from last week, and you'll see right away just how bad these things are. On the first page it says, Arbor's underlying CLO performance data for May is now live. 38% of Arbor's CLO loans are now delinquent and/or modified. Arbor has modified loans against 11 properties in the last month. On the surface, this does sound pretty scary, doesn't it? Well, if you look at this company's latest earnings call, you would know that Arbor actually saw pretty big improvements to their CLO portfolio. Delinquencies are actually down 23% from the previous quarter, according to their CFO. And what does delinquent/modified mean? It means that a large number of those 38% are modified and not delinquent. And modify means that Arbor has actually been adjusting their loans to relieve the stress that some of their borrowers are facing. This does not mean that 38 or almost 40% of their CLOs are failing. Even if they were, this red line down here makes absolutely no sense. If 40% of your company was failing, it would not be worth $0. This is again very sensational garbage that's designed to scare you. Even down here where it says, there is no rate cut large enough, no rate caps cheap enough, and no investors dumb enough to save Arbor. What highly educated industry professional would write like this? Again, there's no name attached to this report either, likely due to the author trying to hide themselves from accountability. This also doesn't mean that they're on the verge of bankruptcy like they indicated here. Looking at some of their most recent results, Arbor's book value has remained very stable, which is one of the most important metrics when looking at a mortgage REIT. It's only down 1% from this time a year ago, which would imply their portfolio isn't seeing a high number of defaults. They've also built up a massive cash position on their balance sheet, which is another sign of strength. They recently bought up shares of their own stock, which is another great sign of optimism. Companies only do this when they're confident their stock is trading at a sizable discount. Their stock also saw a brief surge from the latest attempts made by Wall Street bets to punish short sellers. I really do hope that Arbor took the opportunity to sell some of their shares they recently bought, as it seemed likely that the share price wouldn't remain high for too long. All MREITs trade near their book value, so they must have known that this high share price would not last long. So in the end, with all things considered, I'm still planning on buying even more shares of ABR. They've made it through far worse conditions than what we're experiencing right now, and a lot of the same management team that was around during the financial crisis is still running the company today. In fact, the company is still expanding their operations as they just launched a new construction loan project. But these short reports I think are very over-sensationalized, and they're so full of errors that it discredits them in my opinion. Still though, it is a more difficult environment for this company, so I'm not planning on buying a ton of new shares. But with that being said, that's going to conclude today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.